Alright. Today we had a very boring flat day, but today I will talk about how we can trade the unemployment data tomorrow. And it sounds like we're also going to have an attempt for the apes to continue to try to run on the meme stocks. So we'll talk about that real quick as well. But one topic that I've been wanting to talk about for a while, and I keep forgetting to mention it, is that there is a lot of financial scams going around and people pretending to be me that will message you and they'll tell you things like you can copy trade and go deposit your money at this website. That is all scammers trying to steal your money. I will never message you and ask you to copy trade or any of that business, whatever the hell they're telling you. So just be very careful. There's lots of financial scams going around the internet and anybody can pretend to be anybody on the internet. So just know I will never reach out to you and ask you to sign up for anything or deposit money anywhere. Do not fall for those scams, and I'm very sorry if any of you have. That's just the unfortunate truth of the internet. The next thing I want to talk about is the meme stocks, specifically talking about GameStop, and then other stocks like AMC are going to fall into this boat as well. You have this guy that is pumping this stock that has over $500 million that he needs to lock profits in, and he's going to use you as exit liquidity because eventually he has to sell, and when he sells, you are going to be the ones losing money and getting caught holding the bag. So do not fall for this crap. If you are putting any money into this, make sure you are managing risk. Do not buy into this fact that you need to buy and hold and you're going to screw over the hedge fund shorting these stocks. While that is true and there are lots of people shorting the stock losing money, you are never going to make money simply holding. You need to get in and get out very quickly. Or what I suggest is just completely avoid it altogether and watch it from the sidelines, because I can't doubt that it's entertaining. I'm not going to sit here and lie and say that it's not entertaining, but do not be one of those fools that is getting roped into buying this crap and then get caught holding the bag with large losses. You always hear these stories of somebody dumping their whole life savings into this crap and then losing it. And I doubt I even attract any of the people that would do that to this channel anyway, but I have to mention it just because it's going to be a very hot topic going into tomorrow, because I do believe the apes are going to show up in force. Just be very careful and make sure you're not buying into that crap to hold for long term. All right, so let's look at SPY, because tomorrow we do have the unemployment data and I am going into it in cash because I really don't have any strong convictions on a move that's going to occur after it, and I'd rather just react to the price action. And while we do have a bull trend, I'm not super excited that there's a ton of upside that I can miss here, because even if we go to my upper price targets, that's only about 1.2% higher, and I have no FOMO that I'm going to miss that. I think I could easily day trade my way into way more profits than that. So here I am sitting in cash, and I'm going to let you into my crazy mind of what I'm going to be looking for in price action. And the first thing that's very obvious is if we get a pullback, I'm going to be looking to see if this breakout at 531 can hold. And if that breakout holds, that is just a typical bull breakout retest, and then from there we could have another higher low that takes us to the next price higher. So if I'm going to be buying the dip, it is going to be as close to 531 as possible, where I can easily manage risk on that retest. And keep in mind, this is not a perfect science. Sometimes we go a little bit lower, but that is still a retest of the breakout regardless. So anywhere between about 529 all the way up to about 531, I would likely look for dip entries, which mean I'm taking low risk long entries for the higher price targets. But just keep in mind, if that support fails, we could easily break right down and come right back down towards about 523. So the easiest way to play this, because we have the bull trend, is you are looking to buy dips and not chase what you've already missed. We are getting a little overextended here, so it'd be very possible to get a little bit of a pullback to retest this breakout before we go higher. So if I had to pick a scenario, I would say we get the pullback, and then if there's no reason for the market to go much lower, for example, let's say the unemployment data isn't extremely high and we don't see that people are losing their jobs in a big way, then I don't see any reason why the bulls wouldn't buy that dip, and then we push higher towards the next price target at 537. So it is still a buy the dip market, because it is still a bull market with a bull trend. So this is the most obvious scenario, that if we get a pullback, and that's an if because we don't need a pullback, then we would buy it up and look for the next target higher. If we started to break down, we would manage risk and get risk off, and that simply means we're reducing long exposure and then even possibly looking for opportunities to short the market. But just keep in mind, shorting the market is very difficult while we have a strong bull trend. So manage that risk right around 530, and if we break 530, it is possible we come all the way back down to 523. So that's why I'm saying simply get risk off if the bulls cannot hold above that risk level. So this should be a very simple way to trade it. I'm not swinging through the data. I'm just going to react to the price action tomorrow. So if you're in my Discord server, obviously pay attention to what I'm saying in the charts that I'm posting, and I'll give you an idea of how I'm going to trade it. On the NASDAQ 100 triple Qs, we had an extremely exciting day today because we went down a whopping 0.03% and we did intraday make a brand new all-time high and we did break above that price target at 463. So just like I told you on SPY, I'm going to look for the opportunity to buy any dips around 459 and then push higher towards the price target right around 466. And if I cannot see price action holding that support on the retest, I'll be looking for a deeper pullback down towards 453 to 455. And then down there, I would be looking to buy the dip yet again because bull market, because bull trend, because buy the dip works in a bull market. This is very simple concepts just around following price action, knowing we have the bull trend and knowing where the risk levels are. And remember, as long as we know where the risk levels are, we control the risk as the traders. So you don't need to be fearful if you're managing risk. If you're over leveraging or you're in the options market, just gambling, that's a whole different story. But as a disciplined trader, this is a very technically sound and very simple market to trade. On the Dow Jones, we were up 0.21% today, and we did get very close to the price target at 391. And I really think the Dow Jones is as simple as staying bull above 387 and risk off below 387. If we break 391, there's a good chance we can start pushing higher yet again. But 391 is going to be that line in the sand that I want the bulls to break. However, it's a lot easier to just stay bull above 387 and then get risk off below it. On the Russell 2000 IWM ETF, we were down 0.72% today, and we're right on top of the risk level at 203. And if we break down below 203, I'm going to be looking for a gap fill at 200 and a support at 199. And I do want to get risk on down here. So even if we did pull back into this gap fill, I would personally be buying it. And then from there, I'm going to be looking for a very powerful push higher towards 214. But I'm not saying we need to go down to 200. I'm simply saying if we do break down below 203, that's where I'd be looking to buy the next level lower. And then if we broke down below 199, I'm just getting risk off. On the ARKK ETF, we were up 1.38% today, so the meme stocks are starting to float, as you can tell from the price action, but we're still not above 45, so we're still in that risk-off environment. If we can break back over 45, we could start to look more bullish here. But again, this is a very strong bear trend and a very bad ETF, so do not get bullish on it unless we get a bull trend. On the VIX, we were down 0.4% today, and we're very close to the price target in the low 12s here. But again, if we start to get a deep pullback and we break critical support, expect volatility to come right back into this market, and we're going to see the VIX spike. But right now, we still have a bull trend, and there's no reason to believe that the bull trend is going to roll over and die until the price action tells us it is. On Bitcoin, we are still over 70,000. We still have the bull trend. We're still above the breakouts at 68 and 70,000, and we still have the price target at 75,000 while we're above the bull breakout. So continue to stay bullish while we're above 68,000, and then just get risk off if we break down below it. On Nvidia stock, we were down 1.18% today, and we did get that rejection from that price target zone up there at 1260. And I still think there's a very good chance we're coming down to fill this gap at 1166. And then after that, I think we're going through a deeper correction down to fill the gap at 1064. There is a stock split coming up on this stock, and there's a very good chance it's going to be a sell the news event because a lot of retailers think because of the stock split, it's going to get more buying pressure because the stock price is going to be lower, which automatically tells me it's going to do the exact opposite of what they think, and it's going to go lower after the stock split. So just be very cautious here. I am not an Nvidia bull at these prices. I'm going to put it very bluntly. I don't care if it goes higher. I'm not participating. This is a very risky zone to be buying it in, and I do think it's possible it goes a lot lower. And keep in mind, this is coming from an Nvidia bull, one of the very few that said it was even going as high as 1,000. So do not think for 1 second I'm just an Nvidia bear that says it's only going to go lower. If you've been following me, you know damn sure that's not true. I've been very bullish on this stock, and I've been very correct on it. So as it's going down, look for these gap fills, and that means it's very risk off because from today's close, that's another 11 to 12% lower. On Tesla stock, we were up 1.68% today, and we did get a very bullish day today because we bounced off of 173 and we closed back above all these moving averages at 176. And if the bulls can continue this and push through 180 and break 185, I do think we're finally well on our way towards the arrow price target at 207, but I need to see the price action confirm it. Above 180, start to get bullish, and above 185, we're bulls on parade. But if we cannot hold support at 173 and 167, we will need to get risk off because that's a bear trend going a lot lower. On Apple stock, we were down 0.71% today, and I continue to tell you between 195 and 198, I think this is a lock the profits and sell because I don't think there's a ton more upside here. However, it is still a bull trend while we're above 194, so I can't deny the fact that it could go higher and hit the price target at 198. But there's very little reward for lots of risk here, and if we start to pull back, the strong support is down here between 190 and 186. So jumping back over the S&P 500, tomorrow should be some volatility with the unemployment data. And keep in mind what I said about the apes. Do not buy into that crap. And if you are, make sure you're managing risk very well. Those are not long-term investments like some people want you to believe. Get in, get out, take your money, and never come back. And once all of this is said and done, delete the damn thing off your watch list. Those are very dangerous stocks, and there's a good chance they will eventually go to $0 once all of this crap blows over and it's no longer happening. However, with that being said, follow price action. We have very clear bull trends here. There's no reason to be bearish. If you're shorting, make sure it's for very short term and you're scalping those very quick moves to the downside, because you don't want to hold long short in a bull trend, and we still have bull trends across the board, and this is still a bull market. So be very disciplined and make sure the price action and the chart are doing all the talking and not noise and nobody's bias. We couldn't care less about somebody's opinion of where the market's going to top or how far the market's going to drop. Who cares what anybody says? All we need are our charts and the price action and managing risk around the critical risk levels, and the rest will take care of itself. If you want to come absolutely crush this market, come join my Stocks Channel Discord server, where you'll get access to all of my intraday updates, my technical analysis, and my trade ideas. You can find out how to join my Discord server by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.